Started.
Good morning. We are here on July 24th with the Finance Committee meeting for MRC. Do I need to do an attendance?
You need to do a approval of a.
I don't have to say who's here. All right. Can I get a motion to approve the agenda?
So moved. Second?
Do we need to do roll call since we're on Zoom? Or we are good? All those in favor?
Members attending.
Right, yeah, I think we're all here in person, so.
I can't read, I didn't bring my glasses. Is Tony on there?
I don't think so. No, because there's just the two.
right.
As. All right. This will be my first treasurer's report, so apologies as I fumble my way through it. Hello.
We're live.
All right. Current bills payable, nothing unusual in this month's current bills. My understanding is that we approve those at the board meeting this month as opposed to the regular process,
Yes,
correct?
and there's really nothing out of the order. This was actually one of the lowest months that we have. And all the bills are in, even our legal bills and everything, so we're not really skipping anything this month.
Good to me.
So, sorry, the number we're looking to recommend to the board is 15,112.51 plus 136.18.
Yes, the 136.18 is come out of the account, but yes, that's what you're,
So that's added to
the top number in the corner is the exact number.
Need a motion?
We need a motion.
I move that we approve payment of $15,248.69 for current
June.
June payables.
Second that. All those in favor? All right. Second quarter financial statement.
That's the cash flow. For the Leighton and Lawton.
Well, I don't know how we label these actually. Is that considered the cash flow or the Leighton and Longton?
So the second quarter financial statement is from the Leighton and Longton, and then this is the budget reconciliation.
Okay, so this is, so we're at budget reconciliation. All right, a few things to draw your attention to. We spoke about last month, the MWS utilities and miscellaneous reimbursement within the lease. So this is a pass-through. I'm on revenue and on expenses. So that's 4730 on revenue and 7502 on expenses. You'll notice that that the two lines don't match, but that's because the revenue is actually lagging the expenses. So the expenses were booked in, so December's high utility bills were booked in December of 24, but we received the revenue and or December of 23, but we received the revenue, actually in February of 24. So that's why the two numbers don't match. The legislative advocacy reimbursement, we'll see that revenue come in quarter 3 and 4. That's a split cost and another pass through. The miscellaneous revenue line, that's account number 4900. You'll notice that that's, was budgeted for 2,500 and we're already at $4,000. That's all been from interest and we just don't expect to earn interest, I guess maybe.
Right.
We
We
expect,
didn't budget
we
it
expect
for
to
it.
have that kind of cash flow, so.
Well,
so,
now we're getting it on our idle cash.
Yes,
Yeah.
yeah, so.
Moving down to the expenses, you'll notice 5209, the retirement plan has not yet been expended. We don't have that set up yet. Karen, I can help, like, I've
No, I
worked with
know,
them
I
a
just,
lot.
nope, I'm hoping to get it done in the next week. We'll see.
Okay.
I just the spring and everything just was totally crazy. I'd hoped to get it done by the end of June and then,
Totally understandable. If you need to tap out because you've got other things going on,
no, I mean, it's really not that complicated. I mean, it is kind of complicated, but I just gotta re-engage and now I'm back. I'm done with my vacations. Most of my craziness is over, so
All right, that's
I
good.
commit to getting it done before I see you all again, and even before that. So I apologize for that, Mike, because I know you've been sitting on that money waiting to put your side in.
unfortunately, he's been sitting on it. You'll notice 5212, that workers and unemployment compensation. We're at 71% of the budget. That's because we paid the annual premium in February, and then we do quarterly adjustments to make sure that we're paying for the work that we're actually putting out. Board expenses have been a little bit high. We'll need to adjust that probably in Q3. These are meeting expenses primarily. Bookkeeping services is over the 50% mark, but that's because we anticipated declining bookkeeping expenses as we move things in-house in Q3 and 4. And that's up and running and running in parallel right now and soon to be,
We're right where we expected
Yeah,
on that.
soon to
So,
be independent. There will continue to be a bookkeeping charge because we'll continue to have that letter sent quarterly. The communication line, that will start to go down because we have picked up the marketing firm that will start to do our newsletters for us. So we're on track there as well. And then, already mentioned the utilities. Any other questions?
Good, Mike.
it's nice not having to move a bunch of things around. You know, find this to do this and do that. It's kind of.
I don't know why Sophie had such a, had to put so much work into this one.
Is there
This is
any,
a piece of cake.
Timing.
is there anything we're supposed to be doing to make these match up? I mean, is the revenue being recognized January an issue? I mean, I don't know enough about accounting, Jeff.
So, I talked to Mike about this and, he mentioned that he expects that this practice will end soon, probably before the winter, new utility bills. We're hoping. If it doesn't, we will begin to align them by, billing out the revenue at the same time we recognize the expense. But at this point, we recognize those expenses in 23.
Yeah.
And you can't,
Back change.
yeah.
I guess I just want to make sure that it doesn't come up in a future audit letter saying that we're shirking our duties, but it sounds like this is acceptable.
I don't think it was like no
Proper
every
accounting,
time.
we'll probably get a little slap on the wrist for it again, but so what happens is, and I get a utility bill. I have to pay that utility bill, and then I add that utility bill on the first of the month's lease going out. and that first month lease is due in 30 days, so I'm receiving it, so that's why I'm always 2 months
Yeah.
behind.
Yeah.
Um,
It's not just a pass through, it's an actual rebilling and yeah, so that would
I added to their
drag
lease
it out.
payment.
Yeah, yeah. Okay.
I have a couple of comments on cash flow, if that's what this is. And it's labeled cash flow. What it really is a budget to actual comparison.
Okay.
To have a cash flow, I really think we ought to have one, because then what we're doing here would all make sense.
Yes.
Do we have cash to cover or do we not have cash to cover? This doesn't indicate we have any cash to cover anything. We know we do.
Right.
So we ought to have this thing start out with a beginning balance as of December 31st, 2023.
Mhm.
And then carry through a cumulative balance, either on I usually do it on the bottom line after expenses. A cumulative balance that takes your net for the
Right.
current month and cuts it against the previous month's cumulative balance. So you have a running total of what you have available as cash.
So Bob, actually, you had us do that before a few years ago, and then we have a template and everything else, and you actually provided it to us, and then we didn't have any cash flow. But as part of my report too, getting into too much detail now, we have purchased QuickBooks, MRCS. And so we are doing, it's in my report, I'll update everybody on, but we're going live with that shortly here. So I think not only the template I have that you provided several years ago, but I think that request is going to be very easy to accommodate now that we're putting everything in our own accounting software.
And we can relabel this as budget reconciliation and provide the cash statement from from QuickBooks.
I'd also like to add, I'm really pleased to see a balance sheet, a current balance sheet for the MRC as of July 11th. I think that is so cool.
Yeah.
Thank you.
You're welcome. That needed some work also. So
That's fantastic.
between deposits from potential buyers and everything else, as things get moved around, we finally have a nice clean, everything's in the right place right now.
Yep.
All right. The second quarter financial statement. That is the Leighton and Longpen. I was ahead of myself. That is the Leighton and Longton report. It is a little bit off cycle from the spreadsheet that we just reviewed, because this goes through July 11th and the spreadsheet went through June 30th. Are there any questions on the statements? We have a balance sheet and profit and loss, budget versus actual.
Yeah, just the one comment I have is on the first line of expenditures is actually a transfer of $75,000 from the MRC accounts to a wealth management account. So it's, you can call it an expenditure, but it's really a transfer. And it probably ought to be split out and managed separately. I think this, just in terms of this statement is such a vast improvement from what we've had in prior quarters that we're being almost there.
Yeah.
Is a big positive statement. But I think just a couple of things. I think that's the one that I see that transfers between the MRC assets and the joint venture assets have, I don't know, you know, the auditor has often made comments on those as a deficiency, and I think we're gonna get another one on this. So I think that's the one thing. I mean, real expenditures are spending for things that are expenses, and this is not really that sort of payment. It's a movement of funds from one account to another. It probably needs to be set out underneath it as, not an expenditure, but perhaps, you have a net of revenues and expenditures, you have your net, then you have your adjustments. And this is what these adjustments.
So it's a labeling thing, really. I mean,
Yeah, it's
still
really-
part of the budget, but it's just in a different section.
Yeah.
To complement what you just said, George, it's really a balance sheet transaction
Yeah,
more than anything else. And it shouldn't flow through the income statement.
right.
As a transfer.
So,
And that's for those of you, that's the budgeted payment we intend on making back towards our wealth management this year. Which I foresee there's gonna be no issues doing.
Anything else on the Layton and Longton? Report?
I just wanted to point out, when I was reading through this, I was concerned about statement by Layton and Longton. Management has elected to omit substantially all the disclosures and statements of cash flows required by accounting principles generally accepted in the United States of America. That kind of caught my eye, that it was of concern, but can we just get a quick explanation of why they would have put that in there and maybe the misunderstanding?
well, I think part of it is, I think we discussed this briefly, is there's been, for the last 2 years, some confusion about the overlap of what is the MRC administrative set of assets and transactions and the joint venture. And one might, under a different set of circumstances, have a whole set of notes about what those differences are and what each transaction is. Those are not shown here. It's not clear. I'm not an accountant, I'm not a CPA, so I don't know what Gatsby or whoever requires them to put it in for disclosures. I note that this is labeled as a compilation, not even a review, and it's certainly not an audit. So I think they're just putting in a standard disclaimer that this is what it is, and it's not what it's not. Don't pretend this is an audit because it's
Exactly.
not one. And because it's not an audit, there's certain things they did not look at, which is not to imply that there is or is not a problem,
But it protects them.
but it protects them.
Okay.
So,
I just wanted that public statement.
yeah, so
It
that,
concerned me a little bit
yeah.
as a layperson.
And again, when you have multiple centers and multiple auditors,
Yeah.
everyone needs to be careful about crossing lines and
What
overlap.
they're representing.
Who has what responsibility, who what. So this is part of that puzzle.
Thank you.
No, thank you. Not having been part of the treasurer's report before, it's good to make sure that we bring it all out. The final piece of the treasurer's report is the wealth management fund performance. Our tip fee asset allocation has finally tipped up into the 7-digit figures. 93% of that is held in bonds, 7% is cash. The cash is in money market accounts. I think he told us it was earning about 5.25%.
It tipped over, so this month, this was one of the best performances or quarters it had.
Then the pie chart below the tip fee asset allocation is the that is a breakout of what our bonds are, the 934,525. Currently, we're averaging 5.23% over the year. Our benchmark is 2.94%, so we are happily exceeding our benchmark. The coastal asset allocation is actually funds that belong to MRC, and we will be shortly renaming those.
Once you
And-
approve the minutes today.
I feel like it's been years we've been waiting for this. Years.
Um, do we need to go through an explanation of what those funds are? It's been said enough. Again, we are exceeding our benchmark. We're getting 4.81%. The benchmark is 3%. Is this an appropriate time to talk about what I'd like to see next time?
You have 8 minutes and George still has to go.
Then in that case, George better go.
You have the next meeting.
Yes. Any questions on the wealth management fund?
I'm just gonna note that these balances are market values as of July 15th. And the asset management letter always sticks to that June 30th end of calendar quarter, so they're a little bit different, which is not a surprise. It happens every time. But people should be aware that why are these two numbers not the same? That's why.
George, I will turn it over to you.
Okay, asset management letter is getting shorter and more easily read for a number of reasons. But I think a lot happened from last quarter to this quarter that I should just briefly put on the record. In particular, the main event was finally the 2022 audit of the joint venture. Results were presented, and they were presented with sufficient time for me to update all of the financials since the audit date for consistency with the auditor's recommendations. So, and once I've done that, I didn't feel any need to show pre-audit date results. So now we're just going back to the start of 2022 because everything in the 2022 numbers reflects audited results. We don't have to look back an additional year. It makes the need for fewer columns and the font larger, which is
Much
a
appreciated.
plus for everyone. But substantively, now that the audits were complete, there were a couple retroactive changes to conform to the auditor's recommendations to do that to the balance sheet and the statement of that position. In particular, there were a couple of years where I was getting tip fee receivable data that apparently were being produced without accounting for uninvoiced tonnage that had been delivered by the end of the quarter, but not yet invoiced. The auditor made that correction. That's now reflected in the statement. Since that's no longer an activity that the MRC is engaged in, it doesn't affect anything after June 30th, 2023, but the 2022 number is now in line. And there are a couple of things that fall into that category. The auditor kept the evaluation of how the site is valued at cost on the as an MRC asset. The ownership position in MWS LLC is a little bit complicated. There are two transactions here. When the MRC bought it out of receivership on August 9th, 2022, and it was 100% owner, which implies an equity approach to accounting. And then in 2023, when the MRC sold 90% of its position and became a 10% interest owner in WLSS, then that would change the nature of the accounting treatment as well. So I have said, when the auditor does the 2023 audit, I'll update the asset management letter because I don't want to pretend I know what the auditor is going to say in advance. That would be a double effort that's of no value to the MRC, frankly. We'll keep what we have on the basis of the 2022 value. When the auditor does the 2023 audit, we'll have an updated basis, and then going forward, we can use that. I think there were a couple other things that are listed in the report and notes. Some of you will remember there was a question at one point, who would be paying property taxes? Would it be a developer under a proposal, or or would it be the MRC? That did not get resolved finally until June 30th, 2023. As of 2022, there was still some uncertainty. The auditor had some recommendations on how to handle that, and certainly differently from the way it had been handled. It's resolved today. but retroactively, we've adopted the auditor's recommendations. And there are a few other things of that nature, but I think bottom line is we are now tied to an audited financials as of the end of 2022. With, if things go well, we'll quickly turn around the 2023 audit. I have some work to do because I had to wait for the 2022 audit to update 2023. I'll turn mine to the auditor. Hopefully auditor under oversight will turn that around more quickly. At this point, the main difference being the handling of the 2023 transaction. And then we'll be up to speed and we can go forward in a more straightforward way. But I think the point being that what we have is a little easier to read now than it was, and it's only going to get better. So any questions on that? I mean, the results are pretty straightforward. I've set out the, and especially if you look at July 1st, 2024, I've set out the ending balances as reported on the bank statements for each of the accounts and balance sheet. At this point, the only liability, the auditor suggested that the MRC had received funds under a prime grant. This was back under pandemic related funds to support staff, can only be used to staff, so that the amount that hasn't been expended is essentially a liability restricted for payment. So that's shown as the only liability. That's in table 1 here. Table 2 is a little bit more complicated, but what it does is basically what we mentioned before. On the bottom of the page, we're looking at the change in that position. At the top of the page, we're looking at additions or revenue, deductions or expenses, and adjustments, which after fourth quarter 2023, we don't need to do any adjustments because our life is simpler where we are now. And then we're just matching the change in that position to the adjust excess of additions over deductions. And when you get the same number 2 different ways, that's a balanced financial spreadsheet that explains what's going on. So I think that's kind of the background. Bottom line, the assets are at this point, in addition to the facility position and the investment in the site, it's basically the cash value in the various accounts. The only recommendation, which is a carryover recommendation, is to continue the consolidation process, which Bell had mentioned earlier, taking the old cash collateral account, which doesn't need to be there by agreement anymore, going through the process, which is approved, so that those funds could be managed with the other investment accounts, and basically consolidating accounts so it's a simpler sense of where the money is, what it's for, now that we have a different set of purposes than we did under the agreements that expired or were terminated either in 2022 or in 2023. So that's the basics of the asset management report, kind of a little insight into the audit. There are questions, happy to take them. Otherwise, you know, for a motion to accept and approve the.
I would move we accept that report or recommend we accept the report.
Second.
All those in favor? All right, next piece of information is just that the next meeting will be on October 23rd, 2024, location TBD.
Yeah.
Is there any other business? If not, I'll take a motion for adjournment.
So moved.
All those in favor? All right, over to you, Aaron.
I see that. Hi, good morning, everyone. It is 10:05 and we're starting just a little bit late, but this is the start of the July 24th board meeting for the Municipal Review Committee. And now calling it to order. First order of business is approval of the agenda. I get a motion. Do I need a motion?
I
think
move
I
that
do.
we approve the agenda.
Second.
Of this.
All right, and everybody's here. We don't have any. We have any members online? Bethany or no? Okay. So all in favor? Excellent. We're all in favor. Next thing we will do is consider the minutes of the April 24th 2024 quarterly meeting and the May 29th, 24 special board meeting.
Move approval of those minutes?
Second.
All in favor? Tony?
Oh, sorry.
Just want to make sure we had
The morning's been so far.
Sorry. Move along quickly. We've got a lot of other stuff going on, so one of those being very happy to be presenting the 2022 audit, which is great, a little overdue, it feels like, but we've gone through a lot of changes through the years from, I think we were doing 18-month audits down to 1 year. This one has been delayed, but we finally have it. Unfortunately, our auditor is unable to be here today. George graciously agreed to meet with him and present the results of that audit today, so I will turn it over to George.
Okay, thank you, Aaron. In the packet, there are 2 letters and a set of financial and operating reports, which together constitute the audit. And just to be clear that I had spoken with Donald Higgins of Haverlock, Esty and with whom we worked together on many audits over many years. He was comfortable having me present the audit in its absence. At the end of this discussion, there will be a vote required for the board to indicate whether or not it accepts the audit and the attended letters. So that's where we're going with the presentation. I will say that 2022 was a complicated year because in the middle of it, on August 9th, the MRC purchased the assets of Coastal Resources formerly of Coastal Resources out of receivership, including the facility and other associated assets. With that, the MRC created an entity, MSWS LLC, in which it had a 100% ownership share. That subjects it to the equity form of accounting for that entity. There are some complications on what is capitalized and what is expensed. I'm not going to go through them in detail. They are in the papers here. But it is not surprising when you go through an exercise in a transaction of that complexity that sometimes one takes treatment on one's books that the auditor finds perhaps should have been done a little bit differently. So on one hand, it's good to have that information. On the other hand, that was 2022. Since then, the MRC has sold 90% of that position to Integrated. And by virtue of now being a 10% owner, and in fact, less than a 25% owner, the MRC is now subject to a different set of accounting standards under the GASB, the General Governmental Accounting Standards Board. So there's some complication in 22 and 23, but the fact is that going forward, the books, first of all, are going to be simplified. And second of all, there's a question of how much do you do to fix things retroactively and how far back do you go in the name of cleaning things up?
For minutes purposes, sold to Innovative.
Sold to Innovative. Sorry, I think I said Integrated and I was getting that. So my bad on that one. Innovative. Thank you. So again, some of the questions that are addressed in the deficiency letter and the governance letter are general concerns, mostly related to treatments in and around the transaction. But again, the first transaction, because there was a second transaction. So I just wanted to put that in some context. I think, and when we get to the governance letter, we'll see what the auditor has to say about that. But let me start with the deficiency letter. There are deficiencies are something that the auditor considers to be a material weakness. And if it's a significant deficiency, it's a concern that it might not might not allow management or employees to prevent or detect and correct misstatements on a timely basis. So the idea is that we have a system in place that meets all the standards so that the financials reflect the standards to which they are subject. There are a couple of findings here. One involves the differences between reimbursement and transfers. I think we actually had a little discussion of a transaction of this type at Finance Committee. When there's moving money between the MRC assets, the administrative assets, and those that are considered the joint venture, one needs to characterize them and classify them correctly. There were some adjustments recommended by the auditor. Those who were around in 2022 will remember there was some uncertainty as to who would pay property taxes at that time. There was a path there. The auditor made a suggestion as to how that should be reflected in the 2022 books. That was different from what had been originally put there, so we've made the adjustment. Similarly, there were some questions about receivables of tip fees, how to handle uninvoiced tonnage that had been delivered by year end. And how to handle the grant money that was received, the prime grant for application to employment staffing costs under the pandemic timeframe. In each case, the auditor made suggestions for making adjustments. In each case, there are recommendations that due care be used during the process of closing the books in the future. I think, and I think that's the heart of the deficiency letter. I think they were all recommendations that, and I'll talk about this in a minute, we're talking about the asset management letter, were fairly easy to implement at the level of the MRC's basic books. The second letter is the governance letter, which goes to the relationship between the auditor and management. And are there any concerns that, for example, significant transactions have been recognized, material statement, difficulties encountering and performing the audit, and correction of the statements. What you see in the letter is that the audit is very clear that they encountered no significant difficulties dealing with management, which is kind of the bottom line here. That they have identified some misstatements that were correctable and have been corrected, and significant transactions have been recognized in the financial statements. So, and finally, there's even a representation that there were no such disagreements arose during the course of the audit. In other words, even though there were deficiencies under the governor's letter, the deficiencies and misstatements have been corrected, and the audit can go forward on a normal process. So there are, other classical, the contents of these letters are highly structured and regulated according to accounting standards. So I think the letters address it, but those are the basic concerns. The statements themselves, again, it's 2022, so I don't want to go back and spend a lot of time on a time that included the time before when the MRC was still dealing with receivership, when the MRC was still dealing with a prior developer, and there were other circumstances that are quite different from now. I think the important thing in a forward-looking manner is to tie the recommendations for the end of 22 to the financials going forward, and to address the auditor's recommendations, which, as I'll say in a minute, we've done. So I think, rather than going in detail, I think those are the basic concepts. It is a 2022 audit. It has been incorporated going forward, and I'm happy to have any questions for the board regarding it. Again, if there are specific items or concerns, this would be a good time to read.
I just want to say the audit results and the findings and the way they presented it, and more important, the way MRC management has cooperated and worked with the auditor to resolve these issues is to be commended. And I move we accept the audit as presented.
Thank you. I think, to some extent, the MRC has always relied on the auditor to make certain findings and recommendations rather than having a large accounting staff on, internally. We do what we can based on, as a going concern, but when there are unusual circumstances and transactions of the type there were in 2022, that requires a level of expertise that the MRC would not necessarily be expected to have in-house. So it's not unusual to make some adjustments at the end of the year to reflect what the auditor have. And, thank you for your kind words about, the level. I think the government's letter being clean is very important here, and gives confidence in going forward that the MRC is presenting its results fairly.
So we have a motion Second.
Second.
Second, excellent. Do we have any other comments?
I would just like to show my appreciation for Mike staying on top of the auditor and making sure that we got this completed report at this meeting. So I know timeliness has been a significant issue over the past few years, and I'm hoping that we're on a path to timely audits going forward. So thank you for getting that done, and
Thank
George too. Appreciate it.
I would just comment, Mike mentioned that we've had the same auditor for a very, very long time. I'd love to see an RFP go out for an auditing firm. Just because it's good to get a different set of eyes on your books, because every auditor has a different approach. And I think best practice would be to kind of review that every 5 years or so. So I'd like us to maybe try to work towards that in Q3. If that's reasonable and the board members think it's reasonable.
Thrilled about that.
The one comment I would have is that the financials in 2024 going forward will be substantially different for.
I would propose that it be for 24 going
Yeah,
forward,
yeah.
not for 23. I think that it would be very difficult to bring a new auditor up to speed on transactions that occurred in 23.
That makes a lot of sense. You know, it's a new role of the MRC, a new set of agreements, and maybe time for new eyes as well.
My hopes are that is that we do the 23 audit in October's meeting. And then we have so.
Then we are up to speed for 2024. Is there a motion to?
Yeah, we have a motion and a second. Any other comments? I'd rather get the first one out of the way, then we can. All right, all in favor of accepting the audited? financials? Okay, that's, we're all in favor. And do we want to make a motion to give the executive director direction to assemble an RFP?
So moved.
Second.
All in favor? Excellent, it's unanimous. Great. That's a great idea. All right, moving along, we have the asset management report. Again.
Okay.
Have George
Yeah,
talk
well,
to us about that?
Just briefly, I think the key point in the asset management letter, aside from the fact that it's shorter than in prior quarters and that the font is larger in tables 1 and table 2, it is because now we can tie back to the audit financials as of January 1st, 2023. And I see no need to go back into 2022. We just incorporated the adjustments into the balance sheet as of January 1st, 2023. And we've started the quarterly basis, a statement of revenues, expenditures, and changes in fund position, statement of activities with first quarter of 2023. So now we are in a position to tie back and accept the auditor's recommendations going forward. When you look at tables 1 and table 2, you'll see a lot more activity especially in the in table 2, a lot more adjustments, et cetera, in 2023 than in 2024. This was because of the level of transaction in 2023, which again, the auditor will need to look at. I anticipate there will be some level of misstatement because that seems to be the case when you have a transaction of that complexity. Also, the fact that the MRC is going from 100% owner to a 10% owner and switching accounting standards because it's no longer the sole owner, but it's now not even a majority owner. So that's some tricky accounting that will let the auditor tell us how to do. I think that given that that's noted, that the retaining the auditor's cost basis or equity basis for the investment in MWS LLC through the current date is probably the best thing. Instead of anticipating what the auditor do, let the auditor do it. And then we'll work with them to make sure that it's accurate and it's fair and is consistent with the facts as we know them as well. So that being said, Table 1 shows the cash balances, the investment accounts, and then the investment in site and facilities, total assets, a little over 5.7 million. The only liability under the current system is the payment of 26,647, which is the remaining funds of the prime grant that are to be applied through a transfer to the operating fund to payment of staff costs. And this is again the pandemic era grant for supporting employment.
Question about that, if I may. The budget I see has just $20,000 this year for that revenue. Are we planning to just fully draw that this year?
Yeah.
Yeah.
So the only reason is we do the budget in November and we were going through staff agencies. And so
Still,
that
right.
was an estimate. We'll round every third quarter, I revise the budget. So I will change that number to the exact funds, because all those funds will be used for staffing. I'll change that number to the exact funds as a transfer over into the revenue side.
But anyway, and table 2, again, in the more, in the regime post July 1st, 2023, where the MRC's responsibilities have changed. And a number of the revenues and expenses are now under MWS LLC, which is no longer an MRC sole owned MRC, but the MRC has a minority position. A lot of the adjustments and deductions we had to do previously, we no longer have to do. So if you look at second quarter, there are in fact no deductions or adjustments. Which is again a transition to the new age and role of the MRC, which makes life a little easier. The only recommendations in the letter are in fact to continue the consolidation of accounts post 2023. That now that certain agreements are no longer in effect, the MRC is in a position to do. I think it was mentioned previously and during Finance Committee that the cash collateral account, which had a specific role under the old master waste supply agreement, which is no longer in effect. That money, which is over $300,000, I think 29,000 and change, can now be consolidated with other MRC accounts and managed in an integrated fashion rather than being kept separate. There are a couple other occasions of that because we're under a new set of contractual agreements now that Innovative is the majority owner of MWS. So being that, I would look for any questions. And
So you referenced the change, the next one might be, the auditor might be looking at the change from 100% to 10% ownership and how we're looking to their expertise because of the complexity of it. And at the same time, we're saying, I think you said, Mike, we're hoping October potentially have the 23 audit done.
Right.
Are we receiving any signals from the auditor that because of the complexity that might be delayed, or do we have a commitment from them that they're there?
They know that the expectation is to present the 23 audit in October. That discussion has happened.
And
No substantial pushback.
And there, I would assume with tax season and everything else, that should be, before, that's just before their busy season.
yeah, I mean, and I spent a lot of time with the auditor in the last month in particular. I think that getting to 2022 was important. I think now you have one transaction, which is sort of stands out in relief as compared to the other things. I think the 2023 audit will be a lot easier than the 2022 audit was for a number of reasons. And as Michael said, it's much easier to ask an auditor to do a little extra work in September than it is to ask them in April.
He'll have everything he needs. I have everything in a package for the audit. He'll have everything he needs next week to start the audit.
Well, I'll say, I have some things for him that may take a week or two longer, but
Right, on my side.
Still,
yeah, but he'll have everything in August. So. it
Thank
should
you
be
for that.
manageable.
good answer.
And just to elaborate on, so in the minutes that we just approved, those were appointed. That shows that Bell was appointed as treasurer, and now I can submit the paperwork to. She's authorized to move that. That's so.
We're talking about the coastal.
Yes.
name.
Yeah.
Yes, excellent. That's great. Can I get a motion? Oh, I didn't know if we wanted to get the motion, then the comments, or I don't know if we're out of order here, but go ahead.
Well, it could be a motion first and then we can do the comment. I would move that we accept the report and George's recommendations.
Second.
Excellent. No, comments.
I just have a very minor question. Towards the end of your letter, you talk about how the management fees and the lease payments.
Yep.
And you say it's between MRC and Innovative. I thought, isn't it with the MWS, our agreement, or is it really with Innovative?
It's actually 3 words, right?
Is that?
Well, the funds are coming from Innovative
Okay.
and they end up in the accounts of the MRC.
Uh-huh.
The MWS also has a role, and I didn't want to go into describing the whole agreement. in
Yeah.
the letter, so I may perhaps use language as a bit of a shortcut.
Fair enough.
Honestly.
I thought they need to be disclosed. Are there questions, people? We can give them the agreements and take it.
Other questions and comments? All right, we have a motion and a second to accept George's report. All in favor? It's unanimous. All right, it's time for the executive director and committee reports.
Treasurer report, I believe is next.
Yes, yes, it is. It's time for the treasurer's report. I will turn it over to Beth.
And apparently it was done so well previously, you're like, what else could be said? Okay, I'm gonna go ahead and start with the June payables. Total amount of $15,248.69 to be approved by the board today. 136.18 of that was already expended to Verizon Wireless. The payables this month are one of the lower months that we've ever had, nothing extraordinary. Anybody have any questions on the payables as presented?
We accept them, pay them.
Second that. Will I take that?
I'll second. How about you?
I didn't know this treasurer's report, whether you did it. So we have a motion and a second. All in favor of approving the payables? All right, it's unanimous.
All right, and next up, we have a spreadsheet which we have titled as cash flow month to month, but truly is a budget reconciliation. On here, just a few items of note to bring your attention to. Revenues of 4730, which are the utilities, which are reimbursement within the lease. You'll note that has a companion expense line of 7502. The revenues actually lag our expenses, so December 23 revenues are actually recognized in February of 24 on this spreadsheet. So those two lines don't match, but that we're hoping the arrangement will end soonish as Innovative gets their own account with Versant. We mentioned the grant funds for staffing, that's line 4740, or account 4740. The budget of 20,000 will be adjusted in Q3. And then our miscellaneous revenues are far exceeding our estimate made last year, and that's because we are beginning to earn interest on our cash accounts. And our cash accounts are staying stable, so. Other items on the expenses, retirement plan, we're still getting that in place, but that line will be expended. Workers' compensation, that is a one-time expense in February, so then paid annually, so that that percentage is accurate. Board expenses are meeting expenses. We'll probably need to adjust that in Q3 to appropriately express what we will expend there. Bookkeeping services percentage wise looks high, but those will begin to decrease. We're actually bringing all of that or most of that in-house And we'll continue to get a letter from Layton and Longton, just so we have a check and balance. An outside firm looking to make sure that cash accounts are matching what we're saying we're expending. The communication, that will also be decreasing because we brought our marketing firm online. I think you'll hear more about that from Mike in our update. And I've already mentioned the utilities. Are there any other questions about what we title cash flow, but it's really budget reconciliation?
The only thing I'd like to add, great job, by the way, is the interest is only the operating account. The interest we're earning on the other cash accounts would be in the asset management letter. So that miscellaneous is interest just on the operating account, not on the other two cash accounts. Those would be included in George's letter.
One thing to note is that the expenses and revenues presented in the spreadsheet are as of June 30th. Layton and Longton goes further out into July. So the balance sheets don't match perfectly. I've reviewed them and they match close with explanations as to the variance from Mike. Any questions on the balance sheet or profit and loss from the Layton and Longton? All right, and then our asset management in terms of our tip-free asset allocation, we have tipped over into the seven digits, which is very nice. Our cash is in money market, the 7%, and then 93% is in bonds. We are exceeding our benchmark of 2.94% for the bond, so that is performing well. And as George mentioned, we still have that account that is titled coastal asset allocation, but is truly our funds. And that is at 333,157, 8% in cash, 92% in bonds. And that is exceeding our benchmark of 3% with a 4.81% performance. Karen.
So I just want to make sure I understand what's going to happen with the account. So the coastal account is going to get consolidated into the tip fee asset account. So those two are going to be merged.
Yes.
And are we going to title that something new? Do we have a new title? I think we talked about, that was the tip fee stabilization account.
We could have a name that account contest.
Bernie, I don't know.
That's the plan. So that money has to be transferred. So we have an order from the receiver allowing, when it's receivership, it's allowing us to transfer that money into one of our checking accounts, which is noted on that order. And then that will go right back into the tip fee account.
Oh, we have to move it to one account and then into another account?
Has to go. So the order clearly states on it has to go into this checking account. And then from there, that's why it's very important that I had.
Yeah.
Bell has to make a couple of transactions.
So the name of the account will just stay tip fee stabilization for now.
Yeah.
Thank you. And actually, one more thing. We're not gonna have to we're just transferring the assets. We're not selling our shares in these funds, right? I think that's what we're doing. We're just doing a like kind transfer. Is that?
Yeah, I don't have an answer because I don't know if they.
I
That could
hope,
be a potential liability.
yeah, because likely we take a loss
Yeah.
given where interest rates are, but so hopefully we can just transfer. What do you think, George?
I'm not certain of that. I think we had mentioned this in a prior meeting with the advisor, but if it has to go through the operating account, which is actually a cash account, I don't know if that's possible. So it may be that you will have to sell some of the assets. I just don't know that. And
I would try to see if you can look into if they can
Yeah.
work some magic.
that's something,
Yeah, I think
that's a question.
They have these ACAT forms that you fill out where they just they'll suck your money out as is and put it somewhere else. But like you said, I don't know if it matters what kind of account it goes into, but
I think that, the recipient account has to have the capability to incorporate the full set of instruments that are at the sender's account. If you can't transfer, then you're gonna have to sell and transfer
All right,
proceeds.
time for the
But-
first to step up and make it happen for us.
Well, that's, yeah, I mean, again, we had talked about this with the first, at least
Yeah.
one other occasion. I don't know that we got a definitive answer. They were gonna look into it, tell us.
Yeah, the word transfer was just used commonly. I don't think we got into the weeds. That's a great question. So
Yeah.
we'll have to.
One thing I'd note is I asked the advisor about this. We don't have as a board, a good understanding of our investment ladder in terms of how long-term our investments are, what interest rate we're earning at, each, and at what percentage our money is in each, length of time. He says, well, the Dodge and Cox is all diversified and that's laddered out for you, but, not a decision necessarily that we're making. I'd like the, finance committee to consider setting a ladder policy so that we decide how available our funds should be to us. And we couldn't do that before because we needed to have them available. But I think that we can kind of stretch out and to have a longer term look and maybe a little bit more control over that.
I would agree with that. And I would go further to say that we shouldn't be putting our money into bond funds. We ought to be buying individual bonds. That's what we ought to be doing. And that allows us to set the kind of ladder you're talking about. So medium term, I hope that we'd adopt that as a goal.
I believe that is my report.
Excellent, thank you. Have to accept. I don't think we voted on that before.
Voted to accept the treasurer's report? I don't think we do.
We voted to accept the payable.
Payables.
Yeah. Thank you, Val. Good job. Next, I think we're gonna move on to the executive director's report. Carol, thank you.
Thank you, Aaron. This is a regularly scheduled board meeting, so my report is based on a review of second quarter of 2024. Start with some stats. The MSW tonnages for second quarter. Members total MSW tons for Q2 were 23,523 tons. Last year's members tons for Q2 were 22,683 tons. An increase year over year of just about 840 tons. General updates. Over the last 9 months, I have visited MRC. I have visited with the MRC's members, met with town managers, community staff, and toured their transfer stations where applicable. I have been able to visit all but 4 of the members so far and have had face-to-face meetings and conversations with them. These visits have provided invaluable opportunities for the MRC to witness firsthand our members' work on the ground. The members' interactions have not only depended on understanding of challenges and successes within the MRC network, but also provided practical solutions. Not only have I been visiting members and providing updates in person, but we were also able to distribute the MRC survey to members in Q2. Survey will allow us to update information about membership, recycling practices. It enables us to learn more about what the MRC communities recycle and how it is disposed of particular types of other waste. We'll use this information to better understand our members' needs, improve our database, and make our members' waste disposal efforts more efficient. We anticipate the survey will reveal common patterns and issues, suggesting ways to provide better services. Our goal is to increase the quantity and quality of recycling, reduce the cost of handling MSW, and strengthen our partnership with our 115 members. Over the last several months, we've also had a few groups come and see and tour the MWS facility. Just yesterday, Brewer Council took a tour. For that, Maine Senator Peter Lightford and his colleagues, State Representative Dick Campbell and Stephen Foster, were on site for a detailed tour and in-depth update. In May, members of the DEP, Karen Canuti, Scott Blair, Ron McGogan, and Mark King were on site. James Cadella, CEO of Innovative Resource Recovery, conducted each tour, answering questions and discussing Innovative's design plans and timelines. James and I also had an opportunity to go to Norwich Walk and tour the Crossroads landfill. Jeff McGowan, the district manager for waste management, with whom MRC has worked with for many years, provided us with an extensive tour of the entire site. Driving up to the site, you would not have even known it was a landfill. Waste management does an excellent job with this landfill. In April, MRC attended a two-day Maine Resource Recovery Association, MRRA, conference. It was a good conference with just over 120 attendees, including vendors. I spoke with several MRC members in a few communities in our region that are not MRC members. The conference was an excellent opportunity to network with vendors doing anaerobic digestion and recycling commodities in other areas. DEP had a significant presence at this conference with 18 attending, which included Commissioner Melanie Lozmiz. Melanie Lozmiz was the keynote speaker, sharing insights in her perspective of the future of solid waste. In her presentation, the commissioner referred to the importance of the Hamden facility reopen and its vital role it plays in waste, going into waste and the landfill capacity issues in our region. Innovative James Cadella also attended the MRA and was a presenter on future of waste and sat on a future of waste panel. This was a robust panel of 6 from Bowdoin College, Eco-Maine, Governor's Office, the Natural Resource Committee, and the University of Maine. Aaron, MRC's president, also attended the conference. Having staff and office space at NWS facility in Hamden has been great, and much has been accomplished over the last few months. MRC has recently purchased accounting software, QuickBooks. Our administration has entered all of 2024's budget, 2024 receivables and payables into the software. We will go live August 1st, doing our own MRC operational financial entries and check runs for the MRC operations. Then we will provide monthly statements to the CPA to verify and provide MRC with their quarterly independent account reports. We have also built a shared drive within the MRC network. This allows MRC board members to access pertinent MRC information such as permits, accounting, legal, marketing, and more. Thanks to board member Bell Ryder for assisting us in building this drive. MRC staff has also been diligently training on MWS accounting software, which is totally separate from the MRC software. MWS implemented their software several months ago and will go live also August 1st with members billing. This through training ensures that once the software is complete and tested, we will then start invoicing members electronically, hopefully in the next few months. In May, MRC decided to proceed with Design Lab out of Millinocket for communication services. After a lengthy process of vetting several marketing firms, the board voted unanimously to follow MRC's Communications Committee recommendation to execute a contract with Design Lab. Design Lab will work with the MRC on community outreach, press releases, education material, video market, and branding. MRC felt it was essential moving forward toward the facility reopening that we provide constant communication and education to our members while upholding the transparency that we hold to. MWS facility update. Innovative Resource Recovery CEO James Cadella and CFO Kevin Hogan are here today to provide a detailed, high-level MWS facility update for Q2. So I will keep mine brief. There's been a lot of activity at the site. I'm impressed with the time and detail spent researching improvements and proposed design changes. Recently, Innovative brought together a diverse team of over 10 experts from different parts of the United States, Canada, and Europe, including key technology suppliers and design engineers, for a 3-day meeting at MWS. The objective was to review progress, agree on key design aspects, and refine schedules. The global collaboration underscores the depth and expertise and diversity of perspectives involved in the MWS project. In May, I joined Kevin and James and a few others to tour a state-of-the-art organic waste management processing facility in Toronto. This facility is a green bin processing facility. The operation at the Toronto facility is similar to design that Innovative is looking to do at MWS. I know James and Kevin have visited other facilities worldwide, looking at proving technology that can be utilized at MWS to get the most reuse out of the waste that will be processed in Hampton. In mid-June, we had a significant meeting with DEP. The purpose of this meeting was to provide an update and overview of our project to them of key design considerations that will need to be addressed during the permanent and revisit application process. We also started to bring waste into the facility again in June through July for trials and testing. These trials occurred over 6 weeks at 2 to 4 tons per week. I was on site for the trials and assisted in areas of the testing where needed. DEP's Karen Canuti and 2 of her colleagues were also present for one of the trial runs. I want to thank Casella for getting us the waste needed from our members for these trials. Logistically pulling a truck off a route with a small amount of tonnage we required to get it over to the site at a certain time takes a lot of effort. So thank you, Casella. The MWS Board of Directors had its first meeting. MRC holds a seat on this board and was present at the meeting. The meeting was very productive with depth discussions of financing, design, refining the near and medium term project schedules and deliverables. In legislative news, last month, the DEP EPR, which is Extended Producer Responsibility team, presented to the Board of Environmental Protection, BEP. I also attended this meeting. This is the second EPR team meeting with BEP for Q&A. One more revised draft of EPR rules has been distributed with minor revisions, including allowing for public comment one more time up to August 26th. MRC is still pleased and supports the EPR, especially knowing that MRC members who use the MWS facility once online will qualify for EPR benefits. As most of you remember, MRC was asked to join the Materials Management Task Force last January to make recommendations to the Climate Control Council on Maine's existing climate action plan. This was a 6-month endeavor of meetings and strategizing that wrapped up last month. The Materials Management Task Force chaired by Commissioner Melanie Lomez is comprised of about 40 individual experts in their respective fields. MRC also attended the Climate Council meeting on June 18th at the Augusta Civic Center for the presentation. The event drew over 150 attendees and provided comprehensive overview and strategies and recommendations developed variously that was presented to the board. That's all my report.
So now,
Any questions?
that's a lot.
What'd you do in your spare time?
I was wondering,
I'm sorry, go ahead.
on the survey, how's the response rate been so far?
So I believe it's 18 to 20 right now, but we just started calling.
18 to 20% or?
No.
Responses.
And remember, when it comes to the 115, only just in the high 70s, low 80s is the survey. Because
Yeah,
it
the
would be,
members,
it'd be
right.
transfer
It's not the
stations that
communities,
multiple,
yeah.
right? So there's about 20 in, and now we just started calling everybody. Did you get it? When can we get that information? So there's a whole list of calling. There's 3 people on the board. I know, so I was gonna remind you, I got 3 board members that we need to get them in. So, but it's value. I mean, it's a great, this is a professional survey, so it gives you matrix, pie graphs, charts, and everything else of what's going on.
Oh, right, because they do it electronically and it's gonna compile the
Yes.
results. That's awesome.
So
Like
It's a-
25% is horrible so far.
it's a lot of
Some
good.
email get very, very low, single digit turnout, so
Yeah.
the phone call should help.
And we're actually, there's a couple that want to know if we could schedule time where we would just fill it out if they told us the answer. So we're doing that also. So, Go ahead.
On the EPR, the things that the rule that's, the deadline is on in August, is that 100% final or is that just the one section that they've worked on so far? Because have they finalized the list of materials? Like, I remember that was a
They're-
big question and you know, of course, the whole pricing of how they're gonna charge the producers probably.
They do have the pricing. in
Oh,
part
they
of it.
do?
They do have a formula for the pricing.
Okay,
So the next big thing will, when it's finalized, is to hire what they call the steward or hire
oh, right.
the person that's gonna,
So
and they have to go get all the SKUs and put all that.
Okay, so
together.
these rules really are the sort of the
This-
complete set
This is
of.
the Bible,
Wow,
yeah.
Hmm,
So,
okay.
and we have emails, I mean, we just make sure that the anaerobic digestion counts and other things that we do. And we, it's been a long couple of years, but we've made sure that that's in there.
Go ahead.
Sorry. On the design lab, I'm wondering, I think one of the next big activities is the focus groups. And I wondered if you could talk to us a little bit about that, because in my mind, that's, you know, like a very critical step in getting design lab sort of up to speed with where we think MRC wants to go and where, and who's gonna be on the focus groups, how many, when they're gonna take place, how we're gonna decide who's gonna be on the focus groups. What our method is gonna be to solicit people to join the focus groups and all of that.
So these are my thoughts on that. So the focus groups will be about 4 meetings. And they asked for 6 to 8 in each meeting. So what I was thinking aloud was, I think 4 meetings is great. And then if we had 2 whoever for board members want to participate in those meetings, if we limit each meeting to 2, because it's a focus group meeting and anything over 3, we'd have to do the make it a public meeting and get go through all that. And then, there's a handful of people I would like to see on these focus groups that just, they run transfer stations. They've been members for 20 some odd years. But I also think we should have, do like a constant contact and invite anybody that might want to be part of the focus group. And I think we should have a few folks that maybe weren't believers in the project or supported the project, maybe not all in the same focus group, but maybe spread them out to a couple. And I keep that list too, because they call me on a regular basis. And it'd be good to have their input so that design lab just gets everything. Like I envision people like George in one of the focus groups. I think Sophie would be great to have in one of the focus groups, invite her because she's been with the MRC for so long. Like, so there's a handful of people like Kathy, I think, from MMA, that perspective would be great. But I think we should leave a lot of slots open and do a constant contact to see what kind of response we've got from some members that want to. But that's what I envision, probably 4 meetings. We'll say 8 people per meeting. And we'll offer that to the board because that should be able to cover almost the whole board if 2 members want to go.
So we're looking for like maybe up to 24 people. In terms of other.
Yeah, but
non-board
it's
members.
spread out across 4.
Yeah.
Yes. So that's, and that's the next project I want to get through this meeting and the audit and everything, but I'd like to see that start happening in August, because that's what they're waiting on. So I can go a little bit more. So design lab right now, I mean, it's great. I got to devote more time to that, but now I don't know if you noticed, we're posting every day on Facebook. So they send me a list on the 1st of the month and I go through the list and be like, yeah, this is good. We probably shouldn't do that or that type of thing. And so this focus group is the next thing to start. So they understand better. They did just tour the facility with us yesterday, so I think they have a better understanding of the facility. Did that answer your question?
I'm wondering whether it makes sense to invite key legislative members on concerned committees to attend 1 or 2 of those meetings. If for no other reason than to get them in the loop and get them better educated. Thought.
No,
Or maybe there's another vehicle for doing that.
I mean, the thing is though, it's a focus group.
Yeah,
So
well,
if they
some
don't
of them-
really understand what it's all about, I'm not sure. I mean, I guess maybe design lab might be able to give some feedback on that as to if that works that way.
Yeah, some of them do live in communities that we serve.
Yeah.
There's that double.
Yeah.
Anyway.
Okay. It's noted. Like I still have to put this together.
On the list for the content constant contacts? Is it people that want to subscribe to our newsletter, or is it a specific?
So there's already a list of constant contacts, and so anybody who subscribes gets a constant contact. And what I was thinking about making it a constant contact, that we're gonna do these focus groups, would you like to click here and then register? Because I don't know if we got a big response, we can't have every,
Yeah.
you know what I mean? We're gonna have to kind of weed it out.
But I think we've added people to that list, like we
Oh,
sort of,
that list is enormous.
we have like this interested parties list
Mhm.
where we add people sometimes, and then if they, of course, they can click
No,
and
that's the thing.
subscribe, but.
We have a big list. Our
Yeah.
list is, over the years, I mean, we have all the legislators on the list. We update that, all the state representatives. I mean, it's a big list.
Also like the designated rep, the member on the member list, the board of consultants.
I mean, like if Channel 5 says they want to contribute or anything, I think probably, and we don't have space, we probably not
Yeah.
put somebody in there.
So talking about focus groups, you've just conducted visits to, I think you said all but 4 members?
Also for them.
Yeah, so you've kind of done a little bit of a individual focus group. What's the general mood?
Transportation.
General concern is transportation. And the general mood about the direction that we're moving in would be in your, I know it's subjective, but
Support.
support.
I could count on one hand, and I'll believe it when I see it,
Yeah, it's understandable. Yeah,
just than that, but transportation.
Yes. Yeah.
And recycling.
Yeah.
The recycling rate. That'd be the top two.
I do not believe we accept the executive director's report.
No.
Okay, good. I want to get this. All right. Thank you, Mike. We appreciate all the efforts, that lengthy, detailed report. Moving on to a second quarter report from Innovative. I will invite James and Kevin to step to the dais.
All right, morning.
Morning.
Morning still. All right, well, thanks, everyone. Good to see everyone again. And thank again, Mike and the MRC for all the support over the weeks and months. There's a lot that goes on behind the scenes that obviously you're all not privy to, but Mike and Scott and I are in constant contact all the time on making sure, we advance the restart here at Municipal Waste Solutions. Mike gave a great update, so I'm probably gonna be a bit redundant here. But as a reminder, and I probably don't need to, but for those who may be attending, the efforts at the facility are really focused on the design effort around the installation of a larger anaerobic digestion system to convert the biogenic fraction of the waste into renewable natural gas. And so since last we met a quarter ago, we entered in May, we entered into 2 rather large contracts for services. One was with the technology supplier, who basically does the process design around the anaerobic digestion system, the pre-treat system, and renewable natural gas upgrade system. That's the group that, as Mike mentioned, they have facilities throughout the world. We visited one in Canada. So we entered into one contract with them and then a separate contract with an engineering group. They really will do facility integration. So how does that system fit within the 4 walls? Where do we need to expand outside? How's it integrated to the utilities? So to that end, we actually had a multi-day on-site meeting in June. So we kicked off in May, on-site multi-day meeting in June to really just align on the direction, the critical path activities, the key milestones. And so that was a good meeting. It was good to get everyone in the same room. And so since then, we've been having weekly engineering calls, just tracking progress. We have a detailed engineering schedule that I have to share with you all if anyone's interested. So that's all moving forward. Mike also mentioned we've made several trips. One, Mike joined us to a facility in Canada that was processing source separated organics in this pretreatment system. to generate biogas. And Kevin and myself went to Europe to see a facility that was processing it on the fines fraction, which is very simple, which is exactly what we are going to be doing at our plant. If you recall, in the MRF, we're going to be processing the mixed waste. A large percentage of the organics comes through the smaller screens, which is considered the fines, but also has an inerts and different contamination. So the system we selected is what turns that into a slurry that's suitable for digestion. So we actually went to go see a facility in Europe that's been doing that for years. And again, it's just helpful for us to talk to the operators, hear that there's years of experience, in addition to hearing from our partner on the technology supply, hear it from users about what their experiences are, what should we consider, you know, what would you have done differently in your design? And so all those things are just helpful data points for us. Mike also mentioned the waste trials that we ran in June and July. This was really to support some more of these detailed engineering efforts. So what we did is collected additional samples of the biogenic fraction and are currently digesting those in a offsite laboratory right now in a larger digestion system over a longer period of time. And the goal of that is looking at under different operating conditions. What's the quality of gas that's generated? How does that impact the design of our gas upgrade skid? What are some of the macro and micronutrients we need to consider adding to the digesters to keep the bugs healthy? So there's a lot of technical detail. And so, you know, those efforts for the waste trials, you know, really do trickle down into kind of supporting the detailed design of what we're. And all along the way, you know, as Mike mentioned, we continue to work with the town of Hamden, the Maine DEP, the city of Bangor wastewater treatment department, you know, continuing to communicate on what we're doing, making sure that what we are planning is in compliance with what's, you know, what the current regulations are. And so far, it's been rather open communication. So far, we don't foresee any issues when it does come time to permit. And actually, we're also expanding the team. So this week we're bringing on a project construction manager. There's gonna be a lot of activities related to, while we're advancing design, we're gonna need to start removing things from within the building. And there's a lot of detail that goes into making sure you do that safely, optimizing value of equipment that we're gonna recover. And also just getting someone onboarded with all the engineering work. So that's gonna start, individual starts on Friday. And then we plan on bringing on other folks over Q4 as well. So from a timing perspective, I know it's all kind of engineering focused. There's a lot going on. Mike gets to see a lot of it. It probably sounds like, you know, there's a lot of detail there, and I'm happy to share get into more of the weeds with you if you'd like. But so goal here is to advance the detailed engineering around the pre-treatment and engineering over the coming months. And so that allows us to better kind of detail out the retrofits required to the building, specify major pieces of equipment or the long lead time equipment so that we can order them in Q4 is the objective. And then continue to develop the actual construction documents that we could use with contractors through the balance of this year and into early next year. Current project plan is focused around, like I mentioned, ordering some of the long lead equipment in Q4, obtaining the necessary permits to do the work in probably Q1 25, and then that'll allow us to start construction activities. We can start some activities within the building, but I'll say kind of the major land development items to the south of the building, we'll need those permits. So the goal will be to, once we get those permits in early 2025, start construction activities and start the erection of the facility throughout 25. The objective is to start receiving waste in 2025, and start activities to recover commodities through the MRF and help divert some material from landfill while we I'll say streamline the operation of the MRF as development activities on the AD system continue. And then anticipate ramping up volumes and bringing online additional processes within the facility, including the AD system over the next 12 months, right? So you're kind of rolling into early 26 for the AD system. And then the goal of trying to get the nameplate capacity of 180,000 tons per year shortly thereafter. So again, continuing to work, you know, we have a pretty detailed Gantt chart schedule we're using for our permitting activities and engineering activities. So we just continue to kind of track that over the coming months here. And look forward to kind of working with obviously Mike and the rest of, I'll say, kind of the key stakeholders and the DEP and the town of Hamden over the coming months as we advance this. So happy to answer any questions. I mean, obviously, can give you all updates prior to the next board meeting, but hopefully there's a lot more to disclose then. But happy to answer questions now.
Thanks, James.
Yeah, go ahead, Bob.
I have three unrelated questions, sorry.
Unrelated, okay.
When you're testing the equipment, trying to figure out what's the best fit for what you want to do, and you're looking at ambient temperatures
Mhm.
in the summertime, keeping in mind that you're going to have very different temperatures in the cold months,
Yep.
does that impact your considerations at all?
Not on the technology selection, it's more about how do you design, like, for example, outdoor tanks and piping, there's an ASHRAE condition for Maine that says, hey, in Maine, you know, 99% of the time, the temperature is below this in the sun, you know, never does it exceed 95 degrees in the summer or X amount in the winter. And so you use that, and then what you do is you design your insulation and your heat trace and how you keep things warm based upon that. So I wouldn't say it impacts the core technology selection. It's just how do you kind of keep the entire system working properly.
I'm just worried about keeping the bugs alive in the wintertime.
Oh, yep, and this facility was on Canada has very similar, it's a similar latitude to where we are, so they have, you know, the same
They figured it out.
challenge, but.
Are you anticipating any supply chain issues as you move forward with the construction?
Don't know yet. We've spoken with tank suppliers, gas upgrade suppliers. And, no, we've heard electrical's a bit long, but that's kind of all factored into the current schedule. And that's where kind of the goal is, hey, let's try to get some of these longer lead items on order in Q4 of this year. Recognizing there could be, you know, somewhere between 9 to 11 month lead time on some of these things. Which puts us kind of to receiving the last piece of equipment in kind of Q4 25. Now, the goal is the MERP equipment is a shorter lead time and looking to get that installed sooner and up and running sooner, but it's really around some of the more specialty equipment around the AD system that has a bit longer lead time.
Thank you. And the last question. Employees may or may not be difficult to locate once you really get ramped up. Is there a strategy?
I would say not a defined strategy. There's ideas. I mean, obviously, from our perspective, Kevin and I, it's bringing on the next kind of, you know, operations manager. So we have a project construction manager who's going to be local, step to site. Bring on kind of what I'll say is the operations manager. I'm working on that development strategy with them. We've been working pretty closely with UMaine on a bunch of projects. We know they have kind of an alumni outreach group. You find through kind of the industries and kind of I'll say is the maintenance crew, the different kind of I'll say mechanical crews and engineering groups. Everyone has kind of a network of people that helps, but it's conceptual right now, not tactical. So we need to distill it down to something we have time, but takes time to find good people as well, so.
Thank you.
When do you foresee trash actually hitting the floor regularly?
So right now, I think we're working on this, to Bob's point about lead time, working through the design of the front end modifications, which we have a number of them. Working through that, hopefully trying to nail down the lead times on those equipment, which I think are shorter. I'm probably looking at middle of 2025 is the goal to start getting the trash in there for the purpose of recovering commodities through the market.
Your project construction manager, where'd he come from, or she?
Mike McCormick, he was with Sappy, he ran his own business for a while. How did I find him? I don't remember. It was the way.
A Maynard, so he's a Maine, he's a.
Oh, yeah, I mean, he's a Maynard, I think, I can't remember the town. But like, it was similar to Bob's question, it was kind of word of mouth. I just kept asking people and you know, you'd be directed down different paths, make calls. But Mike, and so.
He's
he was
20 minutes
considering
from
a couple
the
roles.
facility.
What's that?
He's 20 minutes from the facility.
He was considering several different roles and we kind of expressed, you know, hey, here's what we're doing, here's the magnitude of the project, and he was interested. So has the
Is the
requisite
idea
background.
that he would stay on after the construction is complete? Possibly.
I think, so, and yeah, and we spoke about that. I mean, there's clearly, you know, between now and the commissioning of the project, 2 years of a lot of work. But then even beyond that, as we all know, there's additional value in the residuals that we're not gonna be recovering on day one that we'd like to. So for example, we've mentioned there's a lot of plastic streams that we'd love to be able to take out of the waste. And we continue to look at technologies, and so there's no shortage of probably bolt-on opportunities. So the plan would be to indeed kind of say, all right, well, you know,
Next.
all the details of how this was constructed, how do we bolt on, you know, recovery technology, you know, the next recovery technology, and the one beyond that. So,
And you had a few candidates, right?
oh, yeah, I spoke to a lot of different
Yeah.
folks.
So that was good to see that,
Interest.
it was, yeah. So,
And again, as I think we used, I believe it was Maine, I think we used Maine Maritime, there was a couple different groups who started reaching out through those networks. Suppliers said, oh, yeah, I know a guy, or so. Word of mouth worked pretty well in this instance.
Other
I'd like
questions?
to add, one thing I want to share I appreciate is, because I sit in a lot of these meetings. And I do appreciate how they call folks out, like, well, I think that will work. Well, you think? You know, I want to see it work and I want to know how long it's been working. So because I'm the guy in the background saying, when are we opening? When are we opening? But I do have to say that there's not a lot of shooting at the hip going on here or cowboy engineering. You know, they're very methodical and when these people throw something on the table. So.
And I would second an appreciation for that. In our conversations, I've really come to feel very comfortable with your process and your determination to get this right the first time. What I'm hearing today supports that as well. Thank you.
Thank you.
Any other questions, comments?
Just have a question. I think it's for Mike. Are we gonna do a re-education to our members on the change of the process?
Yes, so, and that's part of, you know, one thing is when we went and researched and did the marketing firm, that was part of it.
Mhm.
You know, there's a big piece in there for education, but yeah, you mean like the unacceptables, the tires again and all that. Notices will go out. See, that's something that waste started coming in and it was always there and nobody realized it because Perk was taking it.
Yeah.
So the nice thing is we'll know long before waste is coming in and we will. I mean, when I visited, that was something I checked on. It's, what are you doing with your tires and your and your mattresses now? And depending on where they're going, they have thrown them back in, you know, because it's one can, one dump. But they're totally were aware, you know, that stuff's coming back out and they were totally aware of that and accepted that. Especially the ones that were really, those are the ones I focused on. We had a few that were really put a lot in and they understood, so.
Speaking along the same vein, a little different than re-education, we're likely gonna need to have a public information meeting prior to or kind of in conjunction with our DEP permit application revision submissions, so that'll probably be sometime late Q3, early Q4. So,
Of 2025.
oh, this year, yeah, we'll have to kind of say, hey, community, here's, put notices in the paper, say, here's exactly what we're doing, we're asking for this change to the air permit, this change to the land permit, this change to the solid waste. And again, none of them are, in our opinion, consequential or substantial, but it still needs to be a kind of a public process, so it will be a public meeting at some point.
Does it make economic sense to, because you've been running the MRF and you've run it a couple of times, I guess, and you've probably identified areas that you want to make changes in.
Mhm.
Does it make any sense economically to get that going well ahead of the back end?
So yes, that's the plan. I mean, we are looking to. There's a bunch of changes that need to be made that preclude us from starting it today, right? So that's kind of, because otherwise we'd be disrupting waste flows just to shut it down in a month or two. And the staffing issues, as you can appreciate. But that is indeed the intention, is to get it up and running as soon as we can. Run towards that and try to isolate. You know, kind of keep the AD activity separate. You know, the challenge that we're kind of looking at now is making sure when, let's say we run to that date, we get the MRF up and running as quickly as possible. Need to make sure we can do that, have all that truck traffic and people moving safely while we have a very large construction project going on, which requires lots of lay down yard and contractors and, you know, hundreds of people on and off the site. So that's kind of one of the things we're working through right now too, is how do we think about, you know, starting up this while we're still have months of construction on the AD project.
Would you be expecting to lose money during that phase or expecting to at least catch?
No, right now, we're penciling out that and again, depending on volumes, it
Right, and
would be cash flow positive.
Positive.
Not what we're hoping for, but it's something to, hey, we're not losing money to get the material while we run the material recovery facility to start recovering material.
You're not sending it to a landfill?
Yes.
No, that's cool.
So have you got to the point where when everything's working correctly,
Mhm.
you know, you get the front end, the back end,
Mhm.
what percentage actually ends in landfill?
So we will meet it's low 50% in our model. 50%. Yeah, they were low to mid 50% diversion in the model. Right now, which in our threshold is 50. We kind of know where there's some low hanging fruit on other items, but candidly, a lot of them don't make economic sense to put the additional capital and expense in to recover that 2 or 3% more. So those are the things where we've been, you know, like we mentioned, you know, we looked at a bunch of things for the film plastics, and we've been talking with folks about technology, conversion technologies. They're not quite where we need them to be to feel comfortable to put our seal of approval that we're doing it. So there's definitely opportunity, but we want to, like anything, want to make sure we kind of step into it and not just overpromise and underdeliver.
Like, if I could add a good example, you all remember the briquettes.
Yeah.
Well, briquettes due to transportation and how they're done was Dragon Concrete.
Right.
Dragon Concrete doesn't exist anymore. So that's that was probably 6 or 8.
Oh, God, yeah, I think we could get 10 to 15% by putting all that plastic film
Yeah.
into a briquette. It's not, there's no magic in making a briquette. Just no one wants to buy a briquette. So, you know, or there's probably, cement kilns and coal plants in the southeast and west that we can ship it to, but then we'd be economically underwater on those tons.
So that's what he's talking about, future, I mean, does that briquetter become a pelleter in the future? And do we make lump, we just don't know. The important part is getting everything started phase.
Could convert them, so a place like a Sappy or a Re-Energy could use them?
Very, reason why, Dragon was so, they have and I'm not an expert, but their air permit is very robust compared to everybody
Yeah,
else.
so cement kiln, just at a high level, without getting into specifics on any facilities, biomass facilities don't like them because the plastic, the residuals go into their ash. So that's a challenge for the ash, and then you can't land apply it. Boilers, like it's such a paper mills, are very particular about the fuels that go in. Yes, they could, but then you need to promise a certain amount of kind of what their emissions factors are, and they go through kind of years of testing to make sure that, they're not just going to say, bring it on in. And because we're not making it today, we don't have the pellets to give them to test. So it's kind of this, chicken and egg scenario. Whereas cement kilns, like Mike said, one, they're less concerned about ash because all of the material just goes into the finished product, and they have a more robust air. But because of that, cement kilns are very similar to incinerators. They charge a lot of people to accept their fuel. Now, we have a higher value fuel. We're very, the briquette is very similar to like a tire direct fuel, like a chipped tire. But again, not everybody in the world can use that as a fuel source. So. But that's a, like, for example, that one chunk right there is a 10 to 15% swing. And there's a buyer in the world somewhere for these things. It's just what is the net cost to us to do?
Good conversation. Thanks for all the questions. Anything else? Any other comments, questions? James and Kevin? All right, thank you very much. I really appreciate the update. It's very encouraging to hear this mid-50s number and looking forward to it.
Waste in 2025. I know everyone's ears keep.
I know, I know. All right, our next quarterly meeting is scheduled for October 23rd, 2024, location to be determined. We have anybody online for public comment? No comments, no questions. All right. Moving right along. Do we need to have an executive session to consult with our legal counsel? Nothing.
Not from my perspective.
I don't think there was anything scheduled. Okay. Great. We will move along to an executive session. I will take a motion to enter into executive session to conduct executive director annual performance review.
I would move we enter into executive session per 1 MRS 4056A to conduct the executive director's annual performance review.
Second.
All in favor? Mike, we'll excuse you.
Sorry.
All right. All right, so we are returning from executive session. We did have a discussion regarding the executive director's performance and came to a agreement regarding compensation. I will take a motion as a result of that executive session.
I would move that in recognition of our executive director's exemplary performance this past year and prior years in anticipation of continued exemplary performance, that we increase his annual salary by $10,000 and increase the MRC's contribution towards his retirement by 4% to bring the total contribution to retirement to 10%, and have all of that to be effective as of July 1st, 2024, which is beginning of his contract year.
Just, I'm sorry, could you, 10,000 brings Mike up.
Oh, yeah.
To
And the
140,000
10,000
annually.
additional salary would bring Mike to an annual compensation of $140,000 a year.
Second that.
Excellent. So we have a motion, we have a second. All in favor? Unanimous. Excellent. Mike, thank you very much
No,
for
thank
your
you.
efforts, which she says exemplary performance. The feedback and scoring reflected that, and we are very grateful for the efforts that you put in the last year. And more importantly, we look forward to what you're going to do for us in the future.
So thank you.
Great
Thank you
work.
very much. Take time off.
I am, I got a mic. All right, I believe at this point, we are ready to adjourn the
So
meeting.
moved.
Second.
All right, all in favor? All right, we are adjourned. No, thank you.